Hello everyone and welcome back to the Florida Relocation Guide. My name is Adam Hancock once again, and today we are talking the famed investor Warren Buffett, but with a really interesting tilt. This very world-renowned investment gentleman made some interesting hedges on the housing market recently. So in this video, we're gonna follow the money of exactly what he did. We're gonna talk about what I think is the reason he did it. And then most importantly, we're gonna talk about what that means for you and what that means for me. And of course, if this content provides you any value at all, if you are in the market for buying, selling, and or investing in the Florida real estate market, please consider reaching out and let's get started. Okay, so Warren Buffett has made some rather sizable bets on the US real estate market recently, but the interesting part is it's not just a broad brush. He made them in one particular category, meaning 800 million worth of stock purchases with Berkshire Hathaway in Lennar, D.R. Horton, and NVR, which is the parent company for Ryan Homes. Affordable, even more affordable. Okay, so what spurred kind of both the timing and the inspiration of this particular video I'm talking about here was an earnings report that one of these three builders just recently put out, and that builder is D.R. Horton. Now, D.R. Horton is meaningful in a lot of different capacities, but one of them being that they are the largest builder in the entire United States. They're number one overall. And I think size matters a whole lot when it comes to this conversation. The report that they're talking about was a fourth quarter of their fiscal year. How did it do against Wall Street's guess? Now, you have EPS and revenue. So basically, earnings per share really related to profit and revenue. Earnings per share for D.R. Horton dropped 5%. Sounds negative, but it dropped to $4.45 a share, but Wall Street thought it was going to $3.97, so it beats it there. And then when you talk about revenue actually jumped 9% to $10.5 billion, which also topped forecasts. Okay, and then just add a little bit more texture before we move on. Let's take the full year of 2023 fiscal for D.R. Horton. So EPS, again, earnings per share, what ended up being down annually about 16%. And then when they talk about revenue, again, revenue came out at a 6% up year over year. Now, depending on your take, you know, if you have a profit indicator going down and you have a revenue indicator going up on both sides at the same time, then it can mean a lot of things. But amongst them, I think a lot of these indicators could be one, just stock maneuvering. That could be a portion of it. It could be D.R. Horton investing, and there also could be a cost element, just multiple things that add to sales going up while profit is going the other direction. But then it gets a little bit more interesting because as a part of this earnings report, D.R. Horton gave their forecast expectation in a broad brush about 2024. And part of that was them believing they're going to deliver about 90,000 new home units in just 2024 alone, leading to about $37 billion in top line revenue. And the company's stance basically for the meaning behind this forecast is they believe that even with high mortgage rates, even with inflation, that the category, if you break it out, of affordable new homes, you take that, is not going to just be strong now. They think it's going to be strong way into the future. And then Wall Street comes in and they say, D.R. Horton believes it. They're the biggest builder in America. Warren Buffett believes it. This is a sign of optimism for the housing market in 2024. D.R. Horton's stock surges 3% just after the earnings report, and we're off to the races. Okay, so we have followed Warren's money. We have heard from D.R. Horton, great indicators overall. But let's pull out a few other very key reasons that I think that these folks are so bullish on the 2024 housing market. Okay, first is housing shortage. Regardless of how many, like 90,000 homes D.R. Horton builds, or every time you turn around there's Lennar and you have Ryan Homes and Centex and all these guys, experts believe we're not anywhere near putting a slight dent in the housing shortage that the last decades of population growth alone has caused. So it doesn't matter how much these guys accelerate production, they're not physically going to be able to compensate for what's needed anywhere in the near future. Okay, second is the category of demographics, and this one I thought was really intriguing. So the simple idea that demographics and timing can support ongoing needs for affordable housing. So take one side, the millennial generation, a sizable population that simply gets to a place in their lives where there's a better than not chance that they start to need this kind of housing category. And then on the other side, you have the juxtaposition of the empty nester and the baby boomer that are going down from that 5,000 square foot family house with a basement they had to a smaller house. So you merge that two totally different parts of the population demographic wise, end up needing a similar kind of house at a similar time, which spurs a lot of demand. And then if you want to throw on top of that, if that's not enough, foreign immigration as well, then that's a lot of demand. All right, number 3 is the idea of just the overall tilt and shift to the new home category. Because in a world where it's a lot more costly to acquire money, and you just have a really low inventory in a lot of markets and scarcity overall, then all of that demand that's trying to be satiated, it's being fulfilled mostly by the new home builders, because regular people reselling their houses, especially if they would have locked in at 3% a few years ago, aren't able to simply fulfill that. Then on top of that, builders are able to offer a lot of logistics and financing kind of things that are attractive. They have debt to income ratio control. They're able to do pay downs on the rates because they own the mortgage company and the title company. They're able to offer incentives and a lot of things that are attractive, basically giving more of the total housing pie to the new construction builders. All right, and the last one I wanted to mention in this section is the idea of just simply hedging overall inflation. Because the fact of the matter is, regardless of the market, historically, hard assets like housing seem to hold value in inflationary periods. Rent prices and home prices, regardless of what's happening, net continue to climb well above overall inflation in the most meaningful markets. Okay, so at this point in the video, we have tracked Warren Buffett's major investments. We also talked about why I think he did what he did, and if you're gonna follow anyone doing what they're doing, he's got a good track record to do so. But now, like always, I don't wanna just talk about like fact. Let's talk about functional takeaways. I wanna talk about like what I would glean from this report, this video, etc. at this point, and say, what does that mean for you as sitting back home as a home buyer or home seller potentially? What's that mean for me? What's it mean for you? And that's what we're gonna do now. Okay, number 1, embrace affordable housing as a category. Just like Warren Buffett does. He's doing it on a huge scale, but it's the same indicators that benefit us at a micro level. If you view affordable housing as a potential investment strategy, it provides good returns and it doesn't break the bank. And whether you're buying it just for pure investment, you're doing an interim option while you build your dream home, you're buying, instead of when your kid gets out of college, you're helping them out with the first one. You are, instead of a dorm room, there's a lot of different ways you could do it. But we just spoke about an entire video that talked about demand being so overwhelming that all of these builders combined couldn't even satisfy it if they wanted to, which means for you some semblance of a guarantee that demand will always exist and so will appreciation. Number 2, scarcity and demand. The simple application of what does this relationship and this balance do to any market? Want versus need. Typically, we're in a great imbalance like we're in now. The people or the companies that own these assets win. They control rent prices. They benefit from faster appreciation based on higher demand, higher property values overall. The thing is that we spoke a lot about the builder delivering these assets. They're going to create them. Warren Buffett's going to invest in that strategy, but they're not controlling on who owns them. So keeping a real close look on this, as well as maybe even up and coming locations where you can accelerate all of those categories as well, could be interesting. Okay, number 3 on the back of my last point is simply location matters. Old school real estate economics here. If we geek out for a minute, not all areas that affordable housing is going to be put in are going to be as meaningful as the other one. Now, the benefit of if you kind of follow the builders and you follow the Warren Buffetts of the world, they have far more information than we're ever going to get our hands on. They're not doing this randomly. They're going to put these things in locations that they kind of know what's going to happen, and it's going to be distinct. But if you have the ability to not just invest, but every once in a while also hit on an area that kind of goes wild for a 1 to 2 year span, even, it could be life-changing returns that you don't get a lot of chances in your life to do that, i.e. a Lakewood Ranch, Florida during COVID, a North Dallas, Texas during the exodus of California and Arizona. That would be another thing I'd look at. All right, my 4th and final one, just to put a bow tie on this entire video, is the idea of long-term thinking. Warren Buffett has made a career and an amazing life off of not just being right, but being right and holding for a very long time. He holds long-term positions. He doesn't just buy the car. He also invests in the driver, and he drives it for 500,000 miles. Real estate historically, in not random markets, wins as a long-term wealth-building asset if you hold on to it and let patience really pay off. All right, my friends, that is a wrap for today's video. I really hope you enjoyed it. Again, my name is Adam Hancock. If you did enjoy it, please consider subscribing to the channel. You can see what's coming next. We're gonna try to, really do an abundance of valuable content here moving out of 23 into 24. If you are curious about the real estate market, you're trying to gear up to make a move late this year, early next year, please consider reaching out, buying, selling, and/or investing, new construction, relocation, Relocation. We're a full-scale real estate brokerage I own in Florida called the Sunshine State Company. Really unique team. We'd love to help you in any way possible, even if it's a conversation. And finally, check out the sunshinestateco.com if you haven't in a while. We have free guides, we have tools. We've been putting out 2 really helpful newsletters a month that are very different than anything you can get here. So you can just simply ask to put you on the newsletter if you're not getting them already. But most importantly, thank you guys so much for watching today's video. We'll see you on the next one.